Let's talk about small caps. How immune has that sector been from the selling pressure we've seen over the last couple of days?
Well, nothing's been immune. There has been quite a lot of downside to shares recently, and most of the equities are in the red, as you guys can see today.
So how are you positioning then your small cap portfolio amid what is going on in global markets and the 6% decline we've seen for US equities over just the last 2 days?
Well, we position in quite a balanced way globally. So what's concerning for us is that we've moved from what was initially considered to be quite a small pandemic centered in China with a robust government response that could affect mainly Q1 earnings, more to a global issue where we can see headwinds for companies globally throughout H1 and H2. And we've seen that in markets across the world. We've been positioned for growth to sell off because we have considered it to be very expensive recently, and that has benefited us.
Tobias, it's Hadley out in Abu Dhabi. Just following up on that, I mean, when you think about a policy response, it's something we've been asking our guests consistently over the last couple of days since those G20 meetings. We didn't really hear anything from those ministers. They'd want to adopt the wait-and-see approach. But in terms of what happens next in the markets and what investors need to hear from these governments, where do policymakers really need to take this from here?
Well, I think they need to reassure markets that they're there to back them up. I think one of the interesting things that we've seen as the virus has spread outside China and they haven't been able to contain it as they tried to, is that you're seeing an increased containment or reduction in the movements of goods and people globally. And that reduction in people and goods is going to put downward pressure on inflation. One of the upsides to that is it does give more room for central banks to put forward more accommodative policy. And that accommodative policy should be beneficial for risk assets over the medium term. I think one thing global investors are looking for is a peak in the infection rate. The equity market was looking through what we saw in China based on the fact there was a peak in the infection rates, but now it's spreading globally. The investors will really want to see that infection rate peak. The markets have been heading higher before that based on two key factors. One, very accommodative central bank policy for the near and the mid-term, and also an attractive valuation for equities, particularly versus bond yields, looking at the earnings yield of equities. And those two key drivers are very unlikely to change in the near term. If we do see policymakers come through and be even more supportive, we are likely to see investors be happy. But what I think people are really looking for is a peak in the infection rate. Once we see a peak in the infection rate, one would expect that investors would look through to the continued favorable environment of those two key drivers, which is accommodative central banks and very attractive valuations for equities versus bond yields.